Hello and welcome to Insurance in Canada. I'm your host, Rick Pedeta. Thank you so much for joining me. On today's episode, we're looking at three articles. The first article talks about the how autopilot features in vehicles, modern vehicles, can affect how insurance companies determine fault in accidents. Our second story looks at AI being implemented in the insurance industry and how certain jobs may be at risk and how some certain jobs in the insurance industry can be enhanced with the use of AI. Our last article looks at the Atlantic hurricane season, a rather quiet season this year, and possible reasons for that. So without further ado, here is Insurance in the News. Our first story today looks at a story we touched on the previous episode, referring to a settlement or judgment in Florida regarding an automobile accident where the driver who was at fault uh, was had the drove a Tesla and had the autopilot feature on, and how Tesla was assessed liability because of the autopilot feature failed to prevent the accident. So the article we'll look at touches that and looks a little more in depth as to how autopilot features can affect in the future how fault is determined in these types of accidents where autopilot features are engaged, and how current legislation is insufficient to really address this. So let's take a look at the article. What autopilot means for insuring at-fault accidents. How do insurers determine fault in accidents involving cars that rely, at least in part, on autopilot systems? Currently in Ontario, uh, there is what's called the fault determination rules, which is part of the Ontario Insurance Act. The fault determination rules are utilized by all insurance companies in Ontario, and the fault determination rules gives the scenarios for all the most common accident scenarios, gives description of those accidents, and indicates which driver or which vehicle is what percentage at fault in that particular accident. So your classic rear end, one party rear ends another party without any other uh, mitigating factors. The fault determination rules indicate that the person that rear ends the person in front is 100% at fault in that accident, and every insurance company abides by those rules. So if there's no rule that uh, covers, there's no accident scenario rule that covers the particular accident scenario that an insurance company is dealing with, they normally would just utilize common sense and normal driving habits. But fault termination rules currently cover the vast majority of accidents we see on the road. So that's how it currently works. Back to the article. Answering that question is harder in the wake of a recent $242.5 million civil verdict in Florida, which found an autopilot feature was partially responsible for a fatal 2019 collision involving a Tesla, says Adam Mitchell, CEO of Mitch Insurance. Plus, a recent lawsuit by Tesla shareholders alleging the vehicle maker concealed some risk of self-driving systems only adds to the confusion. The Tesla shareholders' allegations have not been proven in court. Elon Musk, Tesla CEO, has dismissed the allegations, saying the car's safety metrics are better when the autopilot feature is engaged than when it is not. In the meantime, no regulatory frameworks or questions on standard insurance applications exist to help brokers or carriers determine whether a client or prospective client will regularly use autopilot when driving high-tech electric vehicles, Mitchell says. It's not just electric vehicles that have these types of systems, though. They are prevalent in Teslas, but it's not the only auto manufacturers that's really adopting autopilot features. Obviously, the Teslas are a little more into it than other manufacturers, most other manufacturers, but others are starting to adopt it more and more these days. Right now, in our regulatory framework, there's only one policy, and the only mechanism insurance providers have is to increase prices or decrease prices based on risk. He tells Canadian underwriter insurance companies are going to be waiting for these things to prove out. Are there fewer accidents, less severity, and does that offset the increase in distracted driving or the increase in people not paying attention? Another factor affecting premium setting is recognition of EVs' tendency to catch fire following serious crashes. We talked about that as well. Those fires caused by a phenomenon known as thermal runaway tend to result in total losses for the vehicles that can lead to fatalities. They need to actually be cordoned off well away from other things because the fire is so intense. Let's go back to everything available is for a certain dollar. Sometimes the cost is 1-to-1 and there's no actual savings for the risk transfer, but somebody will be willing to take this risk, or it's just possible additional jury verdicts will follow the Florida civil lawsuit, including an ongoing appeal of that verdict, and eventually create precedent. Depending on how that goes, it could mean an untenable amount of risk and liability will be put onto auto manufacturers. If you don't want to expose yourself to something, just leave all that liability where it already sits with the person making the bad decision, says Mitchell. Don't expose yourself to a place where you can incur more liability. And that goes to what I was saying before in the previous episode where we talked about that particular court case in Florida. If we have a lot of, and as the article mentions, that that judgment for 242.5 million is being appealed. So whether that'll be erased or reduced, that remains to be seen. But when it comes to autopilot features, self-driving vehicles, because now the driver and owner of the vehicle is relying on this technology to keep the vehicle safe and prevent accidents, when it does fail, as it did in that particular case, although it doesn't really state, I couldn't really see for that particular court case in Florida why the vehicle didn't see the other vehicle that was parked at a T intersection. So, but it does go back to product liability becoming the primary vessel that's going to provide liability coverage in those accident scenarios, as opposed to the automobile liability. The automobile liability obviously is going to factor in somewhat because it is an automobile insurance and the owner of the vehicle is responsible for their vehicle, regardless if they were driving the vehicle or not. But obviously, who's carrying $240 million worth of liability coverage under automobile policy? So that's why there's unintended consequences when it comes to such huge verdicts being passed down by these juries. Not only is there, how is somebody supposed to be recovering that amount from the defendants? It's the law of unintended consequences, that if this is what the auto manufacturers are going to expect when it comes to accidents involving their vehicles and their autopilot systems failing, then what's the point of trying to implement these systems, develop them any further? The risk at this point becomes untenable, unpalatable for the auto manufacturers. So there is the balancing act between compensating innocent parties for their injuries, their damages caused by these accidents, but at the same time, we have to be realistic when it comes to trying to assess liability and the amounts that it's not going to really affect society and the progress of society. That it's always going to be a complicated balancing act for the courts to try and determine that. More so in the States, you don't see, I have never seen a settlement or a judgment for that amount in any Canadian court case. I'm not a lawyer or anything, but I do try and keep an eye on Canadian court cases when it comes to settlements and verdicts and judgments, to see what the amounts these days are being handed out by courts, because it does affect the premiums. In the end, it's going to affect the premiums for everybody. Yes, the insurance company, obviously I don't think Tesla has that much, that liability insurance, but regardless, it's going to, their insurer will be involved somewhat. So if that's what the insurer is going to have to be paying out, even a small portion of that, it's going to have to be recovered in the premiums being charged to the manufacturers, and it's just a cost that gets passed on to the consumer as well. Back to the article, brokers and insurers must also layer on the statistical trends of EV repair costs. These vehicles ultimately become uninsurable because of all the tech. He asked, do insurance costs go so far through the roof that all of a sudden getting a Mazda Miata, there's no tech, no confusion about driver liability becoming really attractive, a cheap car that's cheap to run, really cheap to insure. Yeah, we talked about this previously about electric vehicles and some of the pitfalls when it comes to insurance companies trying to insure electric vehicles. The article touched on the flammability of electric vehicles, how a small incident can cause the battery to fault and cause the battery to begin combusting, and it becomes impossible for firefighting departments to try and put out these types of fires. But yeah, another aspect we were looking at also when it comes to repair costs for electric vehicles, because of the specialized knowledge that's required in order to repair these vehicles, the specialized facilities that's required. Not every body shop is prepared to repair electric vehicles, and those that are obviously can charge a premium because they know that other body shops are not willing to touch these types of vehicles, but because they are, they can charge more to do these repairs. So yeah, it's yet remain to be seen. It is being indicated that repair costs for electric vehicles are starting to impact loss costs for insurance companies. So it'll be interesting to see in the future how that's going to affect insurance premiums and how that's going to affect demand for electric vehicles. Not just electric vehicles, but vehicles with autopilot features, automated features. Like I said, Tesla is in the lead with that, but other companies are starting to follow a little bit more when it comes to automated features. Next article looks at AI being implemented in the insurance industry. Is it there to enhance people's day-to-day job? Is it there to replace them? Let's take a look what the article has to say. In insurance, AI is forcing a culture shift, not a culling. AI isn't replacing insurance jobs. It's reshaping how humans create value. We still need humans at the heart of what we do, even if some people do resist change. While some worry that artificial intelligence is sounding the death knell for many careers, others see it as a tool to make life easier for insurance professionals. I am definitely more optimistic, says Pravinda Ladva, Group Chief Digital and Technology Officer at Swiss Re, Swiss Re being Swiss Reinsurance. Mass layoffs elsewhere are being conflated with artificial intelligence, she argued. People are putting two and two together and making 100. She said we actually have more work, more analytics, and more responsibilities than we have people to manage them. Across the sector, the tension is less existential than operational. Carriers are wiring AI into claims triage, pricing workflows, and knowledge capture. Brokerages, especially in commercial lines, are inching towards more structured submissions, automated comparisons, and cleaner handoffs to market. The tools exist, the bottleneck is human. From the front lines of distribution, Shane Bennett, a director at the Canadian platform Quoty.io, puts it bluntly, brokers basically stick to what they know. The friction is behavioral, not technical. Changing habits kind of feels like more work than it's worth to them, he said. In Bennett's view, the resistance isn't anti-innovation so much as a defense of the day's cadence. They're kind of more anti-disruption in their day. I understand what he's trying to say, may not be saying it in the best way, but yeah, being a broker myself, our brokerage is implementing more AI features to help us with our day-to-day work, to try and ease off the amount of work that we do, especially when it comes to renewals, comparing previous policies to renewal policies, comparing coverages, premiums, etc. And there's other features that I know that are coming down the pipeline to help us with automatic quoting, to automatically check renewals against their other insurers. So yeah, those sort of things can assist us in our day-to-day operations. However, I know there is the company in California that has introduced AI agents, so agents who are AI who basically deal with the customer from quoting to policy issuance. So what Mr. Bennett is trying to put out is the benefits of AI to enhance uh, or take off a part of our workload as brokers. However, you have other companies like the one I mentioned in California who's trying to replace us completely. So, whether that actually gets adopted or not is a completely different question, because there is the issue when it comes to brokers about regulations. As insurance brokers, we are licensed by the province, Ontario, the other provinces as well licenses brokers in order to do their job. But how do you license an AI insurance broker or insurance agent? Nobody has even thought about that particular aspect. So, uh, but eventually, there's going to be some brokerage out there is going to inquire about AI insurance agents, AI brokers, and be the first to actually implement that, and have to have the regulators try and figure out how we're going to actually work with that or not. So there's the two camps: AI for enhancement to your day-to-day life, relieving of workload, but there's also the possibility of AI taking over completely. So that day is crowded. Retail and wholesale brokers still juggle multi-market submissions, uneven portal experiences, and document ping-pong with clients. Generative AI is already being pointed at the glue work between these steps: normalizing intake data, checking applications for completeness, extracting terms from offline quotes, and organizing side-by-side comparisons. AI is basically going to handle the grunt work, the data entry, the comparisons of quotes, and the back and forth that eats up brokers' day, Bennett says. If this sounds like incremental plumbing, capital markets research suggests the underlying capability is anything but. An MIT case study by Andrew W. Lowe and Gillian Ross noted an LLM, large language model, can role-play a financial advisor convincingly and often accurately for a client, while warning that even the largest language model currently appears to lack the sense of responsibility and ethics required by law from a human financial advisor. And in a separate study out of the University of Chicago Booth School of Business, the authors reported GPT-4's accuracy, should be ChatGPT-4's accuracy on earnings direction calls was remarkably higher than that achieved by the analysts. The same paper went further on tradability. We find that the long-short strategy based on GPT forecast outperforms the market that generates significant alphas and Sharpe ratios. For example, the alpha in the FEMA French three-factor model exceeds 12% per year. For insurance professionals, those findings are a double-edged marker. General purpose models can outperform pattern-heavy finance tasks. Carriers will push them deeper into underwriting support, exposure analysis, and portfolio steering. While compliance and model risk teams race to harden guardrails, on the distribution side, brokers will feel pressured to prove where the human remains essential, articulating risk, negotiating with markets, and translating choice for clients under real-world constraints. And that's an interesting point to bring up. It's not just brokers and agents that are in danger of obviously being replaced by AI, underwriters as well, to a certain degree. There's that risk as well, at the very least, having their responsibilities scale back to the point where they're involved very little in the process of pricing, determining which risk to acceptability, pricing, terms, all of that. So obviously, if it's AI that's now making all this determination, how do I, as a broker, negotiate with this AI for better terms, better pricing, etc.? So it's an interesting aspect. Claims adjusters, I don't see that as being a type of occupation where AI can take over completely. You might be able to fool some people with AI, convincing people that they're not AI, that they're human, but you're not going to fool everybody. And eventually, it's going to be pretty obvious that you're not dealing, for most people, for some people, it's going to be pretty obvious that you're not dealing with a human being anymore. It's already getting to the point where, there's very little interaction between clients and members of the insurance industry because everything's being done online, over the phone, etc. And some people like doing that. Some people like having that one-on-one interaction with people. So it can be a bit of a double-edged sword, but it's kind of hard to argue with the savings when it comes to using AI to adopt these types of occupations. Bennett sees the winners emerging on that front. The ones that will win won't be the ones who send out submissions the quickest, but those who know how to translate those complex risks into simple, confident decisions for their clients. He said even in a more automated front end, he expects small businesses to prize human guidance at the moment of commitment. In his words, they want that personal touch. They also want quotes, and they also want good prices, and they also want to know what they're getting into. Ladva makes a complementary argument from the carrier vantage point with a seasoned workforce edging towards retirement. She said AI is a mechanism for institutional memory, codifying underwriting judgment. So the next cohort isn't starting from zero. The priority, she added, is execution with the people who will use the systems every day. The technology alone doesn't create value, Ladva said. It's a combination of data, tech, processes, and colleagues that will transform insurance. That's why the human has to remain at the heart of everything we do. And you have to keep in mind there's that aspect also of insurance companies trusting AI to actually take over these responsibilities from the human. We're already at a point where I've seen a few insurance companies who've had to go out and issue refunds because their systems have been incorrectly rating their insureds. Some insurance companies have had to go back 3 or 4 years to issue refunds because the system was just incorrectly rating the clients for the risk that was being presented. And of course, once the insurance company found out about this, they are forced to actually go out and issue these refunds to the insurers. They can't just bury it under the rug. So even their systems now aren't foolproof. And this is with a lot of human intervention. Going more towards the AI side, how do you know that the AI isn't messing things up for you? How do you know they're refusing risks that you would have accepted? How do you know they're giving the correct price? At this point, you're just trying to trust the magic box that it knows what it's doing and has been programmed correctly. So, like I said, I don't think we're at that point yet where members in the insurance industry can be substituted for AI and expect to do as comparable as job in the insurance industry, maybe other insurance industries. But at this point, any assistance that AI can use to make our workloads lighter, I'm all for it. Please bring it on. But yeah, when it comes to other aspects, replacement, we can pretend that it's not. But then again, once upon a time, before automation came into full effect, people assumed that their jobs at factories were safe, but eventually they got replaced by automation, by robot workers. So, you know, it could happen for your office worker as well. Looking at our last article about the hurricane season so far in 2025 being relatively quiet compared to years past. Where are the hurricanes this season as the Atlantic remains quiet? Not a single named storm has formed in the Atlantic in nearly 3 weeks, even though it's peak hurricane season. Where the heck are the Atlantic hurricanes? Philip Klotzbach, a meteorologist at Colorado State, wrote recently on X. Many are wondering the same thing. I'm sure those of you in Atlantic Canada are more than happy not to worry about that, or probably cursing me right now for bringing up that we haven't had any real storm hit the Atlantic coast this season when it comes to hurricanes. Tropical storm, first of all, we'll just knock on wood that carries on for the rest of the year. Tropical storm Ferdinand was the last named storm to form this season. It was short-lived, forming on August 23rd and dissipating on August 28th while remaining over open water. This is only the second time that no named storms have formed during the peak of the Atlantic hurricane season since modern record keeping began in 1950, according to Ernesto Rodriguez, meteorologist in charge of the National Weather Service forecast and office in San Juan, Puerto Rico. Usually conditions during this period are prime. The quietest peak running from August 29th to September 15th was recorded in 1992 after Hurricane Andrew devastated Florida. Three factors are to blame or cheer. One, a strong vertical wind shear, which refers to a change in wind speed or direction with altitude. It has increased thanks to cyclonic circulation in the upper middle troposphere, which is the lowest region of the Earth's atmosphere. Two, persistent dry and stable air across the tropical Atlantic. And three, a drop in the amount of rainfall in West Africa, where tropical waves form during the hurricane season. This is pretty positive, especially for us in Puerto Rico, Rodriguez says. The U.S. territory is still rebuilding from Hurricane Maria, which hit the island as a powerful Category 4 storm on September 20th, 2017. Wow, that's taken a long time to rebuild, already 8 years. The lack of storms prompted experts at Colorado State University to publish an explanatory report earlier this month. There has been considerable discussion amongst meteorologists, the media, and the general public about the recent quiet period for Atlantic hurricane activity, the report stated, which called it quite remarkable. Forecasters say we could still see a busy season in the second half of September and first part of October. A cluster of storms currently located hundreds of miles east of the Caribbean is forecast to become a named storm in upcoming days, although it's expected to turn away from the region and remain over open water, possibly as a powerful hurricane. Another cluster of storms is swirling behind it, but so far it only has a 20% chance of formation. From September 15th to October 15th, conditions would be pretty prime. He noted that the ocean temperatures will remain warm, which provides fuel to storms. Up to 80% of hurricane activity occurs in August and September, and we're already September 22nd, so we're pretty much nearing the end of the prime hurricane season anyways. National Oceanic and Atmospheric Administration has predicted an above normal season with 13 to 18 named storms. Of those, 5 to 9 were forecast to become hurricanes, including 2 to 5 major hurricane, which pack winds of 111 miles per hour or greater. Aaron strengthened this into this year's first Atlantic hurricane in August, reached Category 5 status as a bypass land. No other hurricanes have formed since then. So, like I said, good news for those of you in Atlantic Canada, even Quebec and Ontario can be affected. It's been a long time in Ontario that's been actually hit by a hurricane, many decades, but remnants of hurricanes can still impact Quebec and Ontario as well, with heavy rainfall that we usually see when you catch the edge of the hurricane. But obviously Atlantic Canada, normally they're the ones that get hit the worst when it comes to from the hurricanes that come up from the east coast of the United States. If it even hits the east coast of the United States, sometimes it just makes a beeline straight for the Atlantic Canada. But it looks like for this season so far, Atlantic Canada seems to be enjoying a quiet hurricane season, and I hope for all of you in Atlantic Canada, you'll see that for the rest of the year. Obviously, this is not something we can consider trends. Hurricane seasons, some years are bad, some years are quiet. So whether you'll continue seeing this kind of trend for 2026, who knows, but here's to hoping. And that is it for me for today. I want to thank you for joining me. Please like and subscribe for more. Please follow Insurance in Canada on X/Twitter, and also keep an eye out on Spotify for audio podcasts of these episodes. And until next time, bye-bye.